Hello, this week we will be covering 3 chapters. Don't panic. They are not chapters that are heavy in accounting, calculations, and journal entries. It's mostly informational type chapters. The first chapter we're going to be covering is Chapter 8, Segment and Interim Reporting. I'm going to do a screencast for each chapter and post each one separately. The first learning objective is to understand how an enterprise determines its operating segments and the factors that influence this decision. Okay, so I guess the question is, what is an operating segment? According to FASB, and they give you the topic 280, segment reporting, a segment is a portion of the company that provides information to help users of the financial statements better understand the enterprise performance, better assess the entity's prospects for future net cash flows, and make more informed judgment about the enterprise as a whole. Okay, now, basically an operating segment, or how it has to be reported, is part of the whole company. It engages in a business activities where it has revenues and expenses, and you can calculate either a net profit or loss on that segment. The segment also has those operating results are also regularly reviewed by the chief decision makers of the company, the CEO, the board of directors, the top officers, and they use that information to assess performance, and then they make resource allocations. You know, you have a certain amount of capital money available for capital improvements. Where are you going to put that money? What part of the company are you going to give that to? And the other thing is there has to be information available, discrete information. So it can't be wrapped into something else that you can't pull the two pieces apart. Okay, learning objective 8.2. Apply the 3 tests that are used to determine which operating segments are of significant size to warrant separate disclosure. Okay, there's 3 tests, and basically what happens is if an operating segment passes any one of those 3 tests, it's reported separately. Okay, the first step is to determine segments aggregation criteria. Basically, what we want to do, what we're trying to do here is determine whether the segment is reported separately or whether it is combined with other operating segments. Okay, so one of the things they look at is the nature of the products or services provided by each operating segment. Are they similar or are they totally different? The nature of the production process. If you have one process that is very, very different from the others and they're not necessarily vertically integrated, you probably don't want to report them together. The type of class or customer. What customers are out there? Are they servicing a similar industry? The distribution methods, how they send their product to the customer. And finally, the nature of the regulatory environment. Is this particular segment highly regulated or is it not highly regulated? All right, step 2, which is a terrible typo up there, determining segments quantitative threshold. A segment is considered reportable if it satisfies only one of the tests. So there's 3 tests. It only has to meet one of the 3. The first test is the revenue test. So what you do is you determine the total revenues of the business, and you look at the various operating segments in the business, and if any one of those segments is at least 10% of all the total operating revenue for the business, you would report it. Okay, the second one is the profit or loss test, and you want to look and you want to determine if the profit or loss is 10% or larger of the combined profit or combined loss if larger of all segments reporting a profit. Okay, so again, it's that 10% criteria. And then the third one is the asset test. You're going to look at the total assets of each segment. Are those segments Is the total assets of the segment greater than or equal to 10% of the total assets of the business? So it's kind of easy to remember in the fact that they all have to be 10% or more. The other way you might want to remember it is looking at the first three letters, and if we kind of move the order of this around, it would be RAP, RAP, revenue, profit or loss, asset. Okay, so that would be another way to remember the three steps. Okay, so let's go through and look at an example. The first one is the revenue test. Okay, Atkinson's company is a business with the following 6 segments. So it's got automotive, furniture, textbook, motion picture, appliance, and finance. And what we're going to do is we're going to look at the total revenues of the business, and we want to look at and see if any of those are great, if any individual segment is greater than 10%. And these numbers, as you can see by the little asterisk, is all in millions. So if the total is 97.8 million, 10% of that is 9.78 million. So we're looking for any segment whose revenues are greater than that. All right, and if we look at this, that would include automotive, motion picture, and finance. Those would be the 3 segments that would be reportable as a result of the revenue test. Okay, and you're showing those. Those are the 3 segments because they all are greater than 10% of the total. Okay, now the profit and loss test. If we look at the profit for the entire business, the total profit is 16.5. The total loss is 3.9. So what we want to do is, again, look at 10% of the profit and loss of the business. Okay, so what we're going to do is we're going to apply that percentage to the larger, that's important, the larger of the profit or loss totals. So the larger of the two, the profit is 16.5 million. The loss is 3.9. So we're going to use the profit of 16.5 because that's larger, a larger number. We're not considering the pluses or the minuses here. Okay, so we're going to, so anything, and if we take 10% of that, that's going to be 1.65% of the profit. So we're looking at anything that is greater than 1.65 million. And if we look at the profit segments, we have 3 that are reportable. Automotive is greater than 1.67. Motion picture is greater than 1.67. And, oh, I'm sorry. Go back here. I'm looking at the wrong one. This is, okay. So what we're doing here is we're going to be looking at the total. Boy, I'm having a hard time here, folks. And we want any segments that are greater, that have a profit or a loss greater than 1.67. So that would be automotive, furniture, finance, and motion picture. Okay, and then what we want to do is we want to look at any segments that have at least 10% of the total assets. So the total assets of the business, broken out by each one of the segments, they combine to be 44.3 million. We're going to take 10% of that. So 10% of 44.3 would be 4.43 million, as it says up here. So any segment that's greater than 4.43 million would be reportable. So you've got automotive, motion pictures, and finance. Okay, so the next page is a summary of which ones met each one of the individual tests. And based on that, we had 4 operating segments: automotive, furniture, motion picture, and finance, that met at least one of the quantitative tests. So when Atkinson reports their financial statements and they do the segment reporting, they're going to have to show profit or loss, assets, various required reporting elements for those 4 segments. Okay, other guidelines besides the three main tests. All right, the first thing is the combined sales revenue of the disclosed segments must be at least 75% of the total company sales, excluding intra-entity sales. Okay, so first, what are intra-entity sales? Let's look at a company like Ford. Ford Motor Company has an engine plant in Brook Park. All right, if depending on how they report that, the Brook Park plant could sell the engines to the assembly plant that puts the cars all together, and that wouldn't be included in sales for that period. So you have to they would be included in the engine plant segment's sales. And we would want to take those out because they're not a sale outside the company until the car would actually be sold. So we want to look at the company sales without any sales between segments or within segments. Okay, and then once we look at that, the segments that met the test have to add up to 75% of the total. Okay, the other thing, segments must be added until the 75% test is met. So if the segments we come up to only 50% and there's a gazillion other smaller segments, we have to keep adding segments until we get to 75% of revenue. So we have to report by segment a minimum of 75% of the total revenue. Although they don't say a maximum number, they suggest that 10 separately reported segments might be a practical limit. You get too many and you get lost in the numbers. You're looking at trying to get an idea of what the larger segments of the business are doing and how it's impacting the total business. Okay, and this is a nice flow chart of exactly the process that's set down, what we just got through doing. Okay, it's done in a flowchart method. You identify all the operating segments based on some kind of internal reporting system. You look at the segments and you try and you separate the operating segments to see if they have similar business activities and environments. If they do, you're going to aggregate the segments. If they don't, do they meet some of them, at least one of the criteria? And that's for both. If they do, then they're going to be reported. So this over here on the left-hand side is looking at being reported. If they don't, do the separate segments meet any of the quantitative thresholds, meet a majority of the aggregate criteria? If that's not true, then we have to ensure that 75% rule has been met. If they do, we're going to report those segments separately, and we have to make sure that 75% of sales has been met, and we report any of those segments separately. So this is just a flow chart of what we just went through. Okay, Learning Objective 8.3. List the basic disclosure requirements for operating segments. Okay, so now we know what segments we have to report. The next question is, what do we have to report for each one of those segments? So the first thing that we're going to do is we're going to first of all just talk about general information. Significant company information is required to be disclosed for each operating segment. General information would include things like the factors used to identify a reportable operating segment, what types of products and services from each segment, does the segment earn its revenue. So you got to give a little background on what the segment is. Sometimes it's obvious by the name. For example, if it was General Motors and they were going to report Chevy as a separate operating segment, they could say Chevrolet operating segment. I think most of us would understand that it's related to the Chevrolet cars. But sometimes it's not as obvious as that. Okay. All right. Then what we have to do after we talk about the generalities of the business is we have to show the segment profit or loss if it is regularly provided to or included in a measure of segment profit or loss reviewed by the COO, Chief Operating Decision Maker. So what this kind of the whole umbrella over this idea of segment reporting is, if the company is looking the data in this manner, then we should be able to provide that data to the users of the financial statements, and we should provide it in the same way that the decision makers are using the information. So what are we going to report? Revenues from external customers, transaction revenues from other operating segments, interest revenue and expense would be reported separately, depreciation, depletion, and amortization, equity and the net income on investees if they're using the equity method, significant non-cash and unusual items, and income tax expense or benefit. So those would be things that would be disclosed. Okay. Then what has to happen is the total of the reportable segments revenues must be reconciled to consolidated revenues, because unless all of the segments are greater than 10% of revenues, there's going to be like a lump sum left over. So you have to make sure that the total revenues in the segment reporting equals the total revenues of the company. And you also have to do the same thing for profit and loss. And make sure the total profit or loss, and you may have a category called other, would be total for all of those non-reportable segments, and then all the reportable segments of that total, again, would equal the total for the company. And we also have to report the total of the assets and make sure they're reconciled. So the three areas in which we make the decision about whether or not to report an item based on the 10% rule, we also have to report reconciliations of the segment reporting to the total. Okay, the companies must also explain the measurement of segment profit or loss and segment assets, including a description of any differences in measuring segment profit or loss and consolidated income before tax, segment assets and consolidated assets, and segment profit or loss and segment assets. The basis of accounting for intersegment transactions must also be described. So, for example, a company can actually use more than one inventory costing method. They can use FIFO, and they could use, say, weighted average inventory costing. Various segments of the business could use different methods. The majority of the company might be using FIFO, and that's what they include in the notes to the financial statements. But you might have one segment that is using weighted average, and you would have to make that known to the users of the financial statements. So anything, the users would need to know regarding each one of those measurements and the assets needs to be disclosed.